This is The Convergence.
Hey, everybody, welcome back to another episode of The Convergence, where every week we talk about Web 3.0 and how it is set to change the world. I'm excited I've got two guests this week. I've got Jeff and Matt, both here from Globe 3 Capital, which is a crypto hedge fund, which is sort of interesting. We want to chat a little bit about that. Matt, maybe you can give us a little bit of background on yourself, and then Jeff, I'll have you give us some background, and then we can talk more about how you guys got into this field. Matt, you're up. Let's do it.
Well, thanks, Derrick. My general background, I've been in finance for the past 25 plus years. That's kind of where I've always been. A large percentage of that has been as an options market maker on the floor of the Pacific Exchange. So I was an options trader in San Francisco there for many years. And so that just a passion of mine, and kind of evolved into a couple other industries. And I've been in the payment space for quite a few years now. So I've always been someone that really enjoys numbers, and the payment space is where I'm at until I obviously got into crypto many years ago. And that's been something that I've really enjoyed.
Very nice. Jeff, how about you? What's your background?
Yeah, I spent my early years in high tech, both hardware and software, and actually sold a huge software package to Fisher Investments, Ken Fisher's firm, in the early years. And I always wanted to be in finance. I had a financial background from college. And so transitioned to Fisher Investments when they were about $5 billion of AUM, and helped them grow over 7 years to $49 billion. And that's really where I got my passion in the private money management, top-down, global macro, economist type of approach. And I moved from Fisher to another private money manager that was smaller, also a tactical manager. And then Matt and I came together for Globe.
I was going to ask
Capital.
how that happened. How did you guys start this hedge fund because right now, as we know, the crypto market is challenging. Did you decide to get into this thing after it became challenging or before?
I started in 2014. I was first introduced to Bitcoin by a neighbor of mine, and I was very intrigued. I love the decentralization aspects of it, and I just was fascinated by how it worked. And so that kind of started my journey back then. And obviously we went through the 2017 bull run. And it's funny because when I wake up about 4:30 in the morning, and I have a lot of time before my family gets up. And it just, once I got into crypto, I spent hours and hours in the morning just studying. And so what was a hobby of mine ended up becoming a passion. And so kind of following all the way through that journey with crypto, it also changed in 2020 when the DeFi revolution hit. And that's when everything kind of exploded for me as well. To be able to finally go in and surf through all these protocols and just really kind of get a feel for different protocols and how everything works and what's offered out there. I was just blown away by not only the decentralization part of it, but also you're dealing with liquidity pools, yield farming, staking. I just loved it and spent so much time into it. And it was really great because it turned into that passion that I keep talking about. And so I was just blessed that, I guess there's a saying when you love something, you never work a day in your life. And that's kind of where I see myself right now. And so where Jeff and I have been friends for a very long time. And we started talking about this because I had friends come to me when I would talk about crypto to them. They just wouldn't understand anything I was saying. It was like I was speaking a different language. But they wanted to be involved, and they didn't have time, whether they were working 80 hours a week or had another job and all this stuff, but they wanted to be really involved. And so they just said, hey, I want to give you money. And it was funny. I said, well, I can't take money. You can't just write me a check. It's just not how it works.
Come on, Madoff, you can't just do that? What are you talking about?
Yeah, exactly. So, but knowing Jeff's been in high net worth and that for many years, we've always kind of been in that type of financial game for many years together. It was the perfect partner. We've been friends forever, and I kind of bounced some ideas off him. And that's when we kind of came up with Globe 3 Capital. We're taking really the expertise that we have and taking years of researching, these tokens and protocols, and being able to offer it to really family, friends to start, and other investors. And that's kind of where it started for me.
Yeah.
Jeff, tell us a little bit about that origin, right? How was it when were you following this game before Matt got involved in it?
I was through Matt. So, he goes back and he would always talk about how he bought Bitcoin in 2014 for $300. And actually he told me I should buy some at the time. And I was like, that's for the black
Matt,
market.
you need to call me if you have any suggestions like that today. Because even at 24 or whatever we're trading at, man, I mean, amazing if you had invested back then.
Oh, absolutely. So, he tells a funny story how he bought it at 300, sold at 3,000, thought he was a genius. And then, went to 17,000. He realized I missed something here. And that's really what started his journey. But so he was always the subject matter expert for myself and our friend group. And I was commuting into work about, 6 o'clock in the morning. I had no one to talk to. His family wasn't ready to talk to him yet. So inevitably, we talked 3-4 times a week. And every conversation would turn to crypto. And I'd ask him about, anything I could think of. And along the way, it really became an intersection of opportunity, timing, experience, and a lot of luck. And so I was in a transition mode with my work. I was going to take the summer off and then go find something in finance, hopefully hedge fundish, VC or private equity. And as we were talking, Matt would mention over several conversations, hey, you remember our friend, Larry, he wants to give me $100,000 and my stepbrother wants to give me 200. And one day I just said, why don't you open a hedge fund? Because basically Matt was managing my money, his money. And I said, why don't you open a hedge fund? You don't need that much in this space. And he said, this is the dream. This is always been my dream to be part of a hedge fund. But he said, I don't want to do all the other stuff. I don't want to do back office and investor relations. Yeah. I want to concentrate on the crypto. I've studied the space. I've studied these management teams. I know exactly what I want to do, like, what I'm doing for you and I. And he goes, that's your expertise. And I said, yeah, it is. And he said, are we talking about something here? And I said, I think we are. And so he said, so we just really, it was an exciting, half an hour commute. And it was like, well, how much would we need? And if we could just get started with a couple million. And basically, we had $1 million of just friends and family that had offered it to him before we'd even thought of a hedge fund. So we said, hey, all right, let's get serious here. And let's talk every single morning on the way to work. And let's just really work through the issues and what we think. And are we in sync with how we would want to manage and what we don't want to do as much as what we want to do. And so the opportunity was clearly there. We are both incredibly passionate about the space. We absolutely know it's the future. Blockchain is just incredible and an incredible rabbit hole to go down. The timing was there for both of us, clearly. And the experience with all my 16 years of high net worth, private money management, high-end finance, and global macro top-down, with his 8 years of studying every protocol and every management team he could get his hands on, because that's what he liked to do. And then, of course, the luck part of it. We started these conversations surprisingly in April, and we were like, what a gift this is. Bitcoin isn't in the 60s anymore. It's down in the low 40s, high 30s. And as we got more serious and moved into May, and basically we said, I remember a conversation, he said, I'm 150% in. What about you? I said, I'm all in. Let's go. And so we said, all right, first step is call the lawyers. And we interviewed 2 lawyers the first week, another one the second week, and decided this is a full go. And as we're moving through May, we just kept telling each other, oh my gosh, can you imagine the pricing? It's just coming into us, right? And kept coming. And we said, we've got to hustle. One, these prices, we're never going to see them again. Or, the old saying, what always follows a bear market is a bull market. Yeah. Always, and when demand, always. It's the one guarantee we could give as private money managers. Mm-hmm. And then the other saying behind that is when demand is at its lowest, by definition, it can only get higher. So you saw the sentiment crumbling, you saw the pricing crumbling, and then you saw the gift of the over collateralization and the capitulation that happens at the bottom of bear markets. And when you see that coming from a global macro, you get that V-shaped, bottom. Yeah. And so we saw it just collapse into June, and we're like, we got to hustle. And so we were able to get up and get launched by July. We didn't have all the back office and everything in place and even our website up, but we had a family member that said, I want in, I'll write you a check the day you have banking. And he got in 2 weeks before everybody else. And, he's smiling all the way so far.
That's great.
And then we just started bringing everybody else on in July, and we're continuing to do that. And here we are, and we just couldn't be more excited about everything. And yeah, it's pretty amazing.
Nice. So Matt, from your experience and all of this sort of research that you've done, I mean, what do you feel like? I mean, I've been saying for a long time, two different things, I think, to Jeff's point. Number one, the .com bust of the 90s wasn't the end of the internet. It was the beginning of the internet. And I think people forget that, and even this morning, I'm looking at my ticker right now and I'm like, wow, things are rough out there today. Right. Bitcoin is really struggling today, but to your point, I mean, it is, you got to try to play, you got to, buy whenever the price is low. I mean, what are the things that you saw, Matt, in this marketplace, I guess, that made you feel like there was an opportunity there? And, what's your sentiment right now on the market and where things are going?
No, that's a great question. I couldn't be more excited. I mean, from a macro perspective right now, yeah, things can look a little rocky. Of course, you have inflation, you have all type of geopolitical things, and that could scare a lot of people. But I remember when I was back down on the floor, I went through the internet boom when I was trading options. I was there in 97, 98, and it has the same vibe as the crypto industry does right now. Because I was down there right in the middle of it, and I really get the same vibe, like I said. And what I feel that when it comes to the crypto industry, I mean, I just couldn't be more excited. And I know when I was a trader, you're never going to catch the bottom. You're never going to buy that bottom.
Right.
Let's talk about Bitcoin. Whether you buy Bitcoin at 20,000 or 17,000, it's really not going to matter when it's trading 100,000. And so I try to tell people, listen, you want to be able to dollar cost average. You want to be patient and not to panic. And really the best time to buy is when you have a slightly uncomfortable feeling. You want to be greedy when everyone's fearful. And that's exactly, just like Warren Buffett said. And so even though it could be a little bit scary, the long-term, prospects for crypto, I mean, for me in Globe 3, it just couldn't be brighter. We're super excited about Q4. And and like I said, for me, when it comes to crypto, I've always told people you're either in it for the revolution or you're in it for the money. And myself, Jeff, and at Globe 3, we're in it for both. Let's be brutally honest about it. So,
I was going to say, I hope you weren't just in it for the revolution. You'd be scaring the piss out of me right now.
That wouldn't be very truthful if I said that.
No. So, I mean, where do you see this market going in the next 5 years? I mean, if we look back in the last 5 years where the crypto markets have been, I mean, obviously right now for the first time in a long time with 2023, knocking on our door, it's the vast majority of Fortune 500 companies now have an investment in the blockchain space. They're looking at tokenization. Federal governments around the world are looking at tokenization. Where do you see this going? I mean, is this the next? Is this the moon landing right now? And hopefully, we keep growing this direction. Or what do you sort of feel like things look like?
I don't want to say the sky's the limit because I believe this could go to the moon and beyond. I really believe it could be in everything. I mean, the difference you have now between 2017 is you actually have incredible use cases. You have countries adopting it like El Salvador. You have Bitcoin being adopted by banks and you name it. So you have countries, banks, huge institutions that are jumping in. And the adoption level now between even 3-4 years ago, it's almost hard to comprehend. So what I can see 5-10 years down the road is just this continuing and really blockchain entering almost every aspect of people's lives. And I think what's going to change that and what they're working on now is when people use blockchain and they don't know they're using blockchain, they need to make it a little bit more user friendly. And so there's less steps to do that. And once they achieve that, which is really one of the main problems many protocols and almost everyone's working on right now, is the ability to make it easy for the masses to use. And once that happens, which is not far off, like I said, I mean, it's sky's the limit.
All right, I want to chat with you for a minute or two about Central Business Development. They're my sponsor and underwriter here at the show, and I think it's important to spend a little bit of time understanding what they do, because if you're listening, you're probably interested in this marketplace and you maybe even have an idea. So one of the things I really like about Ryan and the team at Central is that they are really entrepreneurs. They aren't just a development firm that sits there and takes orders from big companies of, hey, we need you to build this out. They really are partners. I've seen this with them now multiple times. I've had listeners of this show that have reached out to them and created projects with them. I've had guests of the show create relationships with Central Business Development. And what they all have really found is that there's this great opportunity to be an entrepreneur with them, where you can approach them with an idea and say, hey, here's what we were thinking, and really get a jam session and a whiteboard session with these guys and figure out, how do you take that idea and make it a reality if it's possible? Or is that even an idea that should be considered in blockchain just yet? That's what I like about what Central does. So I would encourage you to check out centralbusinessdevelopment.com. Reach out to them, even if it's just, hey, look, we're wondering how blockchain is going to affect our real estate investment firm in the future. And you want to just have that time chatting with folks that understand and know this industry. And maybe there's a project to be created there for you. Maybe there's an opportunity to be an entrepreneur out inside your industry and create something new and exciting that will not only affect your business and how it works into the future, but might be a disruptor to other industries as well. Matt, let's chat. Maybe let's grab a couple of different examples, because I think Jeff's point's really valid that, it's very complex right now. And one of the reasons that I started this podcast was because I didn't understand it. And I'm like, the best way to get lots of free advice is to have a podcast and be able to get all the experts, global experts that come on the show and tell you all about it. So it's been very self-serving for me, but some of these terms I think it can be really intimidating too, because in some senses they do apply to the regular stock market and other investments. In other senses, there's a question if they do. Things like yield farming. So Matt, maybe you can tell us a little bit, I know there's staking and yield farming and some of these things that seem really intimidating. I mean, what is that? How does that sort of apply to what you guys do? And is it something that we need to be aware of?
Well, I mean, I think you definitely want to be aware of it, just like anything else. I think yield farming is really kind of chasing yield with different protocols, and you're kind of looking for the highest yield that's out there. So, but you have to be very careful when it comes to that. There's a lot of, let's say, shining stars, very, very tempting things. Like you have the Luna fiasco. They were offering 20% on their stablecoin yields. You kind of wonder, where are they getting that 20% from? So you have to be from protocol to protocol. You have to be very wary of chasing after the highest yield. And a lot of times, if it looks too good to be true, it probably is. And I've gone into protocols where it's shown 8,000% APR. And you're like, that just doesn't seem very realistic. So this is where you need experience and just trial and error in working through these protocols. But yeah, it's really kind of just the chasing of yield to maximize your return on your investment. But it's something I think it's out there in the space, and yields might be coming in, which I actually think is a very good thing, because they're becoming a little more realistic, instead of, and that's how a lot of protocols that I wouldn't trust maybe market themselves. Hey, come to us. We have 1,000% APR. Oh yeah, that sounds great until you get rugged and hacked and all your money stolen. So those are risks that are still real if you give your money to the wrong place. So
how do you do the research on this stuff, Matt? I mean, this is, I'm a pretty active trader, and I'm going out and there's sort of certain things that I look at on a company. How do you do that? When I look at Coinbase isn't really set up for research. It's not a Fidelity. It's not a, I can't get in there and look at the financial statements. It's a little, so how do you find this background information on these, other than just, and I will admit, I hold some Bitcoin and some Ethereum, and I hold lots of these other little tokens that I put $100, $200, $300 on, just because I'm like, I don't know. So I'm just going to, it's like going to Vegas and just land money on all black or all red. You're not really sure. How do you do the right research in this?
It just takes time. I mean, you have to do so much. You have to sift through a lot of garbage. I mean, a lot of times you can go to a lot of these protocols will have websites where you can find out in general about what they do, and you could find out about their tokenomics and a lot of other things, the team, and so you can get a lot of good information. But then if you want to dig a little bit deeper, the years I've spent doing this, obviously I have websites that I found that I really enjoy, that I find that's legitimate information. And you go online to YouTube channels. Granted, especially you got to be careful there. There's a lot of crazy YouTubers out there. And so it just takes a lot of time to sift through all that stuff to really end up finding some sources that you trust. And, I've been doing that. I can't even tell you how many videos and websites I've gone to, but it just takes a lot of time. And I think that's where the time that we've put in and our expertise would really be able to help the average investor get into crypto. So they don't have to spend the thousands of hours that we've spent in doing this, and they can just come right away. And that's what we offer to them and provide assistance for them.
So, for the most part, and this is interesting to me, what you're saying is, to do the research, you've really got to go to their website and trust their information and then try to find other sources that either confirm or deny that. So it's not as cut and dry as investing via the Fidelity platform, right? Where I can go and look at these, the SEC filings and those kind of things. Is there any real oversight of what you publish in a white paper and how does that work?
Not a lot. And you're absolutely right. Even before crypto, I used to tell people, what if you read something off the internet, maybe you believe a quarter of it at best.
Yeah.
So you just have to do so much research, and then you can kind of bounce sites off each other, bounce channels off each other, and really kind of it has to be a lot to where you can sift through, and then you just end up developing your own opinions as well. But there's really not one source or one site or one white paper that is the end all be all, because even if they're trying to tell the truth, you don't know if they can execute. So there's questions around.
Yeah. And Jeff, let me ask you that. From, what are the things that you look for? Because what it seems to me like is this is a different type of investing in the sense that, the SEC isn't deeply requiring them to do certain things. So you've got to act more like you're a private investor investing in an early stage startup company, and you're looking at a pitch deck and you're going, let me check the LinkedIn on these guys. Jeff, what do you look for here?
Yeah, spot on, Derrick. It is the Wild West out here, no doubt about it. And one of my most fun things to do, and as I was learning from Matt, is to ask him, why do we like this project? Why do we not like this project? And one of the stories I remember him telling me was, this guy was in on the early days, helped create one of the biggest platforms out there and spun off. And now has I don't want to mention it, but one of the top coins, but he's a marketer. He's not a developer, and he's just pumping on the YouTubes and out there everywhere. And when you start pulling, which, if you're an average investor and you see it, you're like, hey, this sounds great. Why wouldn't I invest? But when you're Matt and you start pulling the covers off and you go, there isn't much here. There isn't a lot of developers that are onto this new language. They're not going deep like maybe these other ones are. And so Matt is very much has always looked for those quiet builders, the guys that, built something and have a track record, brought amazing teams with them, has money, probably because they invested in Ethereum, when it was $10, and has some maybe good investors behind them, but is quiet about it. They know what they have. They know, if they build it right, if they do it with high integrity, if they create value, revenue, and what we call utility in this space, the money will follow, right? So they're there for the revolution almost, and knowing that if they do the revolution part right, the money will be there. And so that's the protocols that Matt's really locked on. And that
makes sense.
There's 12,000, 18,000 coins out there. One of my favorite stories that I like to tell is I just recently had a conversation with a guy that made, between 15 and $20 million in the crypto space, obviously an early investor. And my question to him was just, why are you talking to us? And he said,
Yeah.
there's 10,000 plus different projects out there. One, I'm in love with the ones I'm in love with. Two, I can't possibly get to them all. Three, I know I need to diversify. And I need people to bring me other great ideas. So he's not going to hire us, obviously, with the big chunk, but he'll look at us as a new coin. And then we'll take him ideas. He'll bring us ideas. And he said, hey, do you mind if I love one of your ideas if I pile on? Absolutely not, because we'll have our investors in. He'll raise the price.
Exactly. He'll make the market for you. So, I'm glad. And Matt, let's talk a little bit about utility, because it is one of the things that I talk about extensively on this show. Now, I have to admit, sometimes I'll fall into the meme coin, frenzy as well, and end up doing something. But I don't, my rule of thumb there is, this is about what I would spend on a good dinner with a bottle of wine, right? That's how much I'm going to invest in. I'm not going to really make a serious investment in something that doesn't have a utility. But hey, listen, there are, we talked about Tesla before this started. I bought Tesla stock when it was like next to nothing and sold it when I thought, man, anybody but suckers have to be still in this thing at this point. Then it went up 5 times since then. So you just don't know sometimes. So let's talk a little bit about utility. When we say utility, Matt, what does that mean to you? What does utility mean to you when it comes to crypto and blockchain?
Yeah, token utility really means different types, the type of demand for the token. What demand is there going to be there? So let's take an Ethereum, for example.
Okay.
Anytime you go log into the Ethereum ecosystem, you have to own ETH. Whether you want to do a transaction, you want to buy an NFT, you want to go to any protocol, you have to own Ethereum. So right there, that creates instant demand. Ethereum has staking. That's great. That creates demand because people want to make a passive return, so they'll buy Ethereum.
Can you explain staking real quick, just so that we make sure everybody understands what staking is?
Basically, what staking is when you have a protocol that offers staking, what they're doing is if you end up staking your tokens, kind of putting your tokens on their blockchain, they will pay you an interest rate for that. So that's and it kind of takes those tokens really not out of supply, but essentially those tokens aren't
out of circulation, right?
Oh, yeah, exactly.
An analogy I often use, Derrick, is it's like putting money in a bank in a CD. So, but you're doing it with the tokens, right? So you're not always having to lock them up, but lock them up, get a higher return. And so the nice thing is, if you're buying a protocol, a token that you like and you want to hold for a couple of years, why not go ahead and lend it to that bank where you can get 4, 6, 8% off of it and still realize the potential gains while creating a nice income.
Yeah, that makes sense. So you're essentially locking up those tokens for a period of time. I love the analogy, Jeff, of the CD, right? It's like you're committing those tokens to be out of circulation for a period of time, and for that you earn an interest rate.
Right. Except the bank gives you 0.25% or 1%. Staking in the decentralization, taking that middleman out, the bank, they're going to give you nothing, and they're going to charge their customer 6, 7, 8%. Here, the decentralization aspect of it is, I'll stake my protocol, I'll get 5%, and then maybe that mechanism lends out at 6, 6.5, right? Something of that sort. So.
Nice. Yeah. So Matt, going back to that staking, the utility. So staking is an important part of that. And it makes sense. This is why you hear the word Ethereum more than anything else now, even more than Bitcoin, is because it's the undercurrent of everything that's happening in blockchain. So please continue on with the utility piece.
Sure. Because for me, it's what type of demand is it going to create? I was looking at a protocol maybe a year ago, and it was a yield farming protocol. It sounded interesting, but then I realized when you were making your yield, they would pay you in their native token. That sounds nice, but then when you take a step back, so when I get paid in this native token, what am I going to do with it? You couldn't stake it. There was really no utility for it. So all I could do is sell it. The only way it's going to go up is if it's because of speculation. And if speculation is the only demand you have for a particular token, that's not something I want to be a part of. Now, I'm not saying you can't get lucky and make money doing that,
Yeah.
But that's not true demand. True demand is kind of how Ethereum is set up, where there is use cases, a protocol to work off of, gas fees and generating that type of stuff. You need that token to be able to use that blockchain at all. And so that's what's very important. You really have to watch that, because a lot of times protocols create a token when there's no need for it because there's so much money into it. Let's release the token.
Makes sense.
Everyone's going to buy it. We're going to generate tons of money. But then everyone that bought that token, like, wait, why is there a token? What's the real utility of it? And I'd say there's thousands and thousands of protocols that have exactly that, where there's really no utility whatsoever. And that's what people have to watch out for. And it's, you know, it's tough because it's very easy to get caught up in speculation. It's happened to all of us.
Yeah, it is. Well, and I was going to say, I think one of the trends I've been seeing, and I'm actually involved in one right now where, you know, they're essentially building the company. They're using the token to raise capital for it. So the utility is in the future. Like you're betting that it will be a utility. And that, you know, that's a lot more risk. And it is interesting to see how investors, at least savvy investors, respond to that. And it's not that they're dismissive of it. It's just that they're more cautious in making those type of investments, and the numbers that they're willing to put in are smaller just because they understand the utility isn't there yet. The utility still has to be developed and formed and created. So it is a little bit more speculation. You're speculating on the ability of the team to deliver right in the future, which there's always risk. You just don't know.
And there's something to be said for that. Yeah, there's something to be said for that.
Right. Especially if you know the team. Yeah, right. I mean, this team, I know the team, and I know they're successful, and I've seen them take companies public, and I've seen other things that they've done. So I'm going, well, I'm really betting on the team and their ability to deliver this to market. And it just happens that instead of selling equity, they want to sell a token. Okay, what would I stake if I was doing equity? It's a little bit different than what I would do as if it was a token.
Right. And to your point, Derrick, and you actually spoke about this with one of your older podcasts just recently, actually, Michael Durso. And I was excited to hear you guys touch on this. Part of the excitement of this space is, as we mentioned a couple times now, we're looking for those teams, those protocols, those use cases, maybe that future utility. But back in the internet days, if you think about it, let's say, you know, you follow Jerry Yang. And I don't know his past, but he's the Yahoo founder. Let's say he worked for Microsoft, created some amazing stuff at Microsoft, saw an opportunity in the internet days and spun off. And you knew Jerry Yang, you knew he brought some amazing teams with him. He had some amazing money behind him. His project, his ideas were intriguing. And you thought, I'd like to invest in this guy and this project. But how would you or Matt or I or any of our investors ever be able to invest in Yahoo when it was 50 million or 100 million market cap, right? All you know is it's a project. We don't know the angel investors. We're not VCs and private equity. So we have to skip it. And what we have to do is we have to wait for the IPO. Well, the IPO, my numbers might be a little rough, but Yahoo came out at $1 billion or $2 billion. And that was our first entrance to be able to say, I can be part of this team now. And it would have done fine for you. But think of the value creation between when you identify them at 50 million to getting them at 2 billion on that first IPO day when you could buy them. That's a 40x.
Absolutely.
And now the 2 billion turns to 10 billion and you're ecstatic because, you got your 5x, or Yahoo did fantastic and they had their troubles later. But now translate that. You know, that was the internet days. Now we get to come to the crypto days. And now these tokens are almost like equities. So Matt and I can invest in them like they're equities if we identify the right teams when they're 50 and 100 million. And that's really what we focus on, the hard stuff, the hard to get stuff done.
Jeff, don't say that to the SEC that they're equities. I just want to, I know. There may be some question there. I mean, I know. No, but it's a really good point, because it's a gray area in some of this stuff right now. And I think, doing this podcast, people ask, what should you invest in? And I'm like, what you should invest in is what you can afford to invest in, but what you can afford to lose, because On some of these, there is a little bit more risk. I mean, I think as you start to get to Ethereum and Bitcoin, these are the bigger boys. These guys aren't going anywhere. But, when there's a new one comes out, unless you have the research that Matt has, you have to be a little bit skeptical and cautiously optimistic, but also understand, to your point, Jeff, you could have Yahoo that you're sitting there. And if the management team looks good and the idea looks good, then you should probably at least consider what you should do with that investment.
Absolutely. And now the average guy can get that return from idea to IPO, which might be mainnet or getting put on Coinbase's exchange, right?
Yep.
And we get to capture that value if we're good and if we're right. And also to your point, the small guy, that's why we started small. We're just a $10 million market cap hedge fund, and our minimum's $100,000. And part of it is because that's like our money and our family and friends, and that's a great place to get started with our track record.
Yeah. Matt, what are the other things that you're looking for? So utility is a big piece, and I know we talked about team, which is a really important thing too. I have multiple wealthy investors that I know, and many times I'll hear them say things like, we're investing in these guys, and I'll say, well, what's the company? And they're like, well, the company's sort of irrelevant, but we're investing in the guys. And I'm like, that's interesting. I mean, they look at the team and they say, I don't completely understand where they're going with this, but they have a track record and I want to be part of the train, that supports them. And I've seen this happen. And listen, it's happened to me personally. And I know a couple of people that are listeners of this show will attest to that fact. I've got a couple of guys I know that are regular listeners that have followed me as an entrepreneur and lost a lot of money in previous ventures of mine, right? But they still write checks. Right? And why do they still write checks? Well, because sometimes they didn't lose money, right? Sometimes they made a lot of money. And nobody out there is batting 1,000, particularly when you're young. You've got to have those both success. Anybody that tells me they've always been a success in every venture they've been into, I'm like, well, then that means the next one's likely going to fail. So I don't want to be involved. I want to see failure in your past, not in your future.
Right.
Matt, let's talk a little. What else? So utility obviously is one. I think the team is another really important part. What other things are you looking for when you're analyzing these type of investments?
Well, obviously use cases like we've talked about.
Yeah.
It depends on how it's going to be able to apply to the real world and what's the specific use case for it. Another thing we looked at is tokenomics. How many tokens are out there? What's the total supply? What's the available supply? How many tokens did the team get at launch? Did they get way too many tokens? How are they using those tokens? So there's a lot you can kind of figure out in regards to the tokenomics. I think one of the reasons why we like a lot of protocols, let's say Bitcoin and Ethereum, for example, is because it has scarcity. As you've seen the amount of dollars printed since COVID, and even before that, but since COVID, it's mind-boggling. And so,
you want to know why there's inflation? Well, you can just look back to how much cash we printed in the last 5-10 years. It's ridiculous.
Right.
That's exactly right, and that's Bitcoin is looked at as a store of value. And Ethereum has the merge coming up, which is they're going to have what's called a triple halving. So they're going to their issuance is going to go down tremendously. And it's going to be like really almost 3 Bitcoin halvings. So you have a kind of a scarcity issue there. And with those type of coins, I believe as coins are coming off exchanges, you could have a supply crunch. I mean, once it really explodes and people are looking at these coins and there's no more left to be had, that's something to take a look at. Whether there's also meme coins where they have 3 quadrillion coins on the market. That to me, that doesn't have great tokenomics.
Yeah, no, and I think that's a really good point, and it's something that I think gets missed in so many of these conversations. Is I had the Bitsby Trippin guy on, who's one of the top Bitcoin miners in the world, and he was like, "Look, everybody, it's easy to forget that there is a day coming in the future where the supply runs out, and when the supply runs out, and there's only demand." And this thing has become a utility across the board in multiple different ways. And certain retailers only accept Bitcoin. All of a sudden, when there's no new Bitcoin coming into the market and there's people that have it locked up and staked and all of these kind of things, very, very quickly you get this supply and demand curve that makes you realize that the price can only go up from there. I mean, it really can't go down as long as people are still adopting and using it.
To your point, Derrick, one of the facts that I like is there's 47 millionaires in the world. There's only 21 million available Bitcoin that'll ever be minted. Now, take that into effect. And also BlackRock, just partnered with Coinbase. So now there are institutions that are dying that, put some value, diversify, get some exposure to this space. And they'll always start with the bigger ones, Bitcoin and Ethereum, and work their way towards the stuff we like. So they're going to be tucking them away. They're not going to be day trading those. They're going to be putting them away. The micro strategies, he's got 130,000 tucked away himself. And you start uncovering some of the treasuries of some of these corporations, as you mentioned when you started, Caterpillar, they're tucking some away. And now one of the other things that a lot of people don't know, Fidelity's working on, how do we allow our 401k participants, just the guy that's working at IBM, that says, hey, I built up $400,000 in my 401k. God, if I could just put 20, 40,000 in, fantastic. Well, guess what? If he does 20,000 right now, one Bitcoin just disappeared. Now times that by 60 million.
And puts it in there for 30 years. Yeah. And
right.
I mean, I agree with that. As somebody who's been worked for myself for many years, I have the solo 401k where you can put a lot of cash in there. Right. And every time I'm in there, I'm always looking, is there anybody that's using anything with Bitcoin? Because you have to understand, hey, I've got another 20 years before I'm going to touch that. Leaving that sit in there, the probability is that's going to be a big win in my portfolio over the long term.
Sure.
So we've talked a lot about this. We've talked a lot about what we're looking for. Matt, maybe because you've had your finger on the pulse here for a while, maybe let's talk about what happened in the market in the last year. I mean, what do you feel like were the causes of this? I don't want to call it a crypto crash, but I guess it was a crypto crash. And I think I just looked at Bitcoin a few minutes ago. It was 19.1. I was like, wow, okay. I mean, it's still not bottomed out yet. So what's actually 19,100 right now. So what are your thoughts on this? What's the cause of, or is there a cause that you can pinpoint?
I think that it is a crypto crash. I mean, you have coins that are down 70 to 90%.
Yeah.
I think there's different reasons. First off, you had the stock market take a hit. Whether we like it or not, crypto has been following the stock market. Maybe down the road, as it evolves, it can decouple from the stock market, but at this point, it hasn't. And then you just have a series of events that was, I almost call it like the perfect storm. You had the Luna fiasco, with that, everything going under. And then you have all these centralized exchanges. You have Voyager, you have Celsius, and then also another hedge fund, Three Arrows Capital. I mean, they were managing billions and billions of dollars. And all of these entities were over leveraged and they got exposed. And, really what happens especially in crypto, when things go down and you've borrowed money, it hits a certain spot, you're going to get instantly liquidated. So it just keeps, there was sell after sell after sell. And once one thing stopped, another thing popped up. And we really thought it was the perfect storm to take us all the way down to this point. Now that leaves us to where I think some of this pricing is an absolute gift. Can it go down even further? Sure, it always can. Sure. But we just think it's a phenomenal entry point, and we couldn't be more excited for really where this market's at right now. And it's really kind of been just a phenomenal gift, at least for us to have that. I don't want anybody to lose money, and people have lost money on the way down as I have, but
but the bottom is right. You got to find that bottom, and you're better off. Listen, one of my mentors was a billionaire investor. He got out of before the crash in 2007, 2008. He got out in like 2006. Now, how much better would he have done if he would have stayed in another year? Much better. But did he get out at the right time? Hell yeah, he did. Right. Yeah. Because he started moving out. He started seeing the trends. He started seeing things he didn't like. And he started saying, I'm just going to sit on the sidelines for a little bit. I don't need to be into the market. I realize I'm going to lose money not being in the market, but I just, I want to go on pause. And he just benched everything for a bit of time and did that. So, I mean, it certainly, there's some wisdom, to the bottom. Wait till the bottom is here. And look, you're right. You could still lose, but you also could still really win big. I guess one of the questions I have in sort of closing here is, and this is probably a little bit more controversial in the sense that, part of our real estate challenge right now, part of our economic challenge right now has been the institutions getting into real estate, buying up lots and lots of real estate. Matt, Jeff, what are your opinions on the fact that now there are hedge funds in the crypto space, which, probably the creators of decentralization might not be huge fans of massive institutions holding, tokens and coins. What are your thoughts? I mean, is that a potential, challenge to the future where of that 21 million coins out there, what happens if 3/4 of them get held by institutions?
We'd love to see it. So, we think everybody has their place in this amazing ecosystem that's getting built. And some folks might not like the hedge fund, but really what we help do is we provide two things. We help provide liquidity into the system that needs liquidity right now. And we also help bring validity and a little bit of certainty to the space. Just like you are, Derrick, you're out there educating people, you're enthusiastic, you're bringing people into the space. Each piece of the puzzle that gets put in, whether you're a developer, whether you're building Ethereum or the next blockchain or a layer 2 off of Ethereum, or you're a podcaster, or you're an investor, or you're a crypto hedge fund, and there aren't a lot of us out here. You're bringing, if you're doing it honestly, with integrity and you're investing in, you're a capitalist, you're rewarding the winners and you're punishing the losers. So we're avoiding the meme stocks, and we're bringing these investors that could have never gotten into the space other than maybe Bitcoin and Ethereum, and we're bringing them in. And if we give them returns, they're going to be enthusiastic. They're going to invest more, right? And so every one of us, and that's the neat thing about this ecosystem, Matt and I are having people reach out to us and just say, hey, can I talk to you for an hour? And they're not selling me anything, and I wasn't selling them anything. In fact, that's how you and I got introduced, was through Patrick Skinner, one of your podcasts. Amazing guy. And he's building an amazing watch, and he's so enthusiastic. Him and I mean, we spent an hour, and I'm like, it's not over, is it? I want to keep going, And
I know, right?
He's amazing. So, but he's not alone. And he's like, I just like to meet people in the space, and he tries to meet 2 or 3 people a day. And because he realizes the more people that come in, the quicker this gets built, the better it gets built, and we all have our piece to play. And so Matt and I, our piece is the investing piece, doing it right, and bringing people that would normally be out doing other stuff.
Yeah. Well, listen, and I think that's, I have to agree. I think the interconnectedness of the space is the piece right now that is so valuable. And I can tell you, from my sponsors of this show, I mean, Central Business Development is a token crypto blockchain development, Web 3.0 metaverse development firm. And one of the advantages that they've had off the show is connecting with so many other people in the infrastructure. I mean, I literally was talking to one of the guys at Central this morning, and I said, what's on your agenda today? And he mentioned 3 people he's talking to. And I'm like, all 3 of them have been guests on the show. So he's like, it's become a small world. I just recently, last week, and I think it's actually gonna be this Thursday coming up, Matthias Wiesel, who runs one of the biggest crypto blockchain incubators and accelerators in Europe, and now he's coming here in December to hang out with us. So I'm like, well, this is sort of cool. Like, the world is becoming a much smaller place because everybody understands the opportunity that's there with decentralization. And and I agree. I mean, I do wonder, if the institutions get really, really heavy in this space, how that will affect things. But I think the great part is it's not like real estate where it's finite. I mean, somebody could create another coin, and if that coin, or token gets adopted and has widespread adoption and a good utility and a good usage, well, very quickly, you could see, segments of the market start to move over to that protocol and create competition. And I think, Jeff, as we talked about before the show a little bit, I am a capitalist. I'm a very much hand to the market kind of guy, and this invisible hand. And that's the great thing about decentralization. So, Matt, in closing, maybe you could tell us, how do you find out a little bit more about what you all are doing with Globe3 Capital? What's your website and, those kind of things?
Yeah, our website's just globe3capital.com. You could put requests through that. And we're also very active on LinkedIn. You could find us on LinkedIn as well.
Well, I know that because I think this morning we both, Matt and I, got on LinkedIn and connected with each other, Jeff too. So This has really been great, guys. Thank you so much for coming on to the show. I'd love to hear, let's a year or so from now, I'd love to revisit, particularly after this market changes, and understand a little bit more about where you guys are. And so you've got a fund that's open now. And I mean, I have to assume, like most hedge funds, you'll just open additional funds as those close out and have success throughout the future?
So our intent was, let's just start small, $10 million fund, bring in all the friends, family, and concentric circles outside of that, $100,000 minimum, as I mentioned, and establish our track record, get our feet on the ground. And actually, one of the most important things, get the back end, the foundation of this platform established. So the fund administrators, the lawyers, the accountants. So do it right the first time. Do it small. Don't worry about it. Be in a $100 million fund. If it happens, great. And with a little luck and a little persistence and perseverance and an amazing market, we'll do just fine.
That's great. Well, hey, thank you guys for being here, and thank you all for listening to The Convergence. And make sure you like and subscribe. We're always putting out fresh new content and talking to fresh new ideas and experiences in Web 3.0. So until next time.
Thanks for listening to The Convergence. If you want more information about the topics you've heard here today, reach out to us at theconvergencepodcast.com.